what I'm gonna be teaching is just basically showing you how to find your daily bias of the day. And using the time frames 1 minute, 5 minute, 15 minute, 1 hour, 4 hours, sometimes even daily. These are the main key time frames that you want to look at. I don't usually look at any other time frame, 2 minute, 3 minute, 7, 10, 30, 45. I don't all these other time frames, I don't usually look at those. These are the main time frames that I look at. Sometimes I look at the weekly, sometimes I look at the daily, but every single day I look at the 4 hour, 1 hour, 15 minute, 5 minute, and 1 minute. So 4 hour, you always want to use it for your direction. This is how you find your bias because everybody knows that the higher the time frame it is, the longer the trade lasts, and it shows who has more pressure, who has more volume, who has more authority in the building, either the buyers or the sellers, either bulls or the bears. So one of the first things you want to do before you do anything, you want to get on your 4 hour time frame and just look at the trend that we're on right now. You can see that we're on a bullish trend so far. And before that, we was on a bearish trend, and then we were just making our way down, making higher highs. I'm sorry, not making higher highs. We're making lower highs and lower lows. You can see we have a lower high right here. Then we have a lower low, and then we have a lower high, and then we have another lower low, and then it just keeps on going. So you can see that we just keep on doing that. So you always want to do that on a 4 hour time frame just to see the trend that we're on. But so far we can see that we have a pivotal area right here, and then we've been trending up for the past maybe 1 or 2 days. It's been since Friday. We're about 4 or 5 days now. We've been trending up because the weekends don't count. So once you do that, you go in a 4 hour time frame. What you want to do after that, you want to go in your 1 hour time frame. Actually, before you do that, you usually want to mark out that 4 hour candle that you want to trade inside of or trade after it closes. So let's mark that one candle. This is that 1 hour candle. This is the this is 10 a.m. candle. This already happened earlier today, so I'm just showing. So it's usually these candles, right? So that's inside of that 4 hour candle. So one of the first things that you want to do on the 1 hour time frame now, you want to mark out your areas, as in your pivotal areas. Another word for that is support and resistance. You want to mark out any resistance that's been broken through or rejected off of, and you want to mark out any support as well. So let's go ahead and move this because we already know what that is. So we have a high right here, and then we also have a low right here, right? So usually I don't usually take a trade until any of these are broken through, I'm sorry. But these are this is on the 1 hour time frame, so it will usually be smaller on the 5 minute or 15 minute to looking for your setup and the entry and stuff. But these are targets. The reason why you have to look for these because these are potential areas where the market could reverse. These are stronger areas as well. So let's go on the 15 minute. So yeah, real quick, 4 hour, find your direction of the trend. You can see that we're trending bullish. 1 hour, you want to continue to see how you want to trade with this bullish trend that we're creating, right? So you go in 1 hour and then you find your areas, as in your highs and your lows. So you got a high point right here and a low point right there. You also have new wicks that came up as well. Look, you can even mark these out as well. It'll pop up on there on the smaller time frames. So we're on a 15-minute time frame. You always want to find your setup, right? You always want to find your setup, what's going to happen in the market. So these are our areas right here, boom and boom. These are our areas that we are looking to either take out or continue, which means we're either going to have a liquidity sweep, as in taking out one of these highs, or we're going to reject off of it and can't continue the other way. So usually a rejection looks like this. All these wicks, 1 2 3 4, all these wicks, these 4 candles that came up and rejected off of this high right here, that's usually what a rejected candle looks like. And it shows that the resistance is resisting, basically, like it's rejecting off of here. So that's another part of finding your bias for the day, because you want to see where the market has been rejecting off of. Like, you want to see if it's rejecting off support or resistance, because once it's rejecting through these things, you can obviously see that there's a lot of pressure right there. There's a lot of volume right there. There's a lot of what's the word I'm looking for? There's a lot of sellers in that area, like liquidity, basically. So you can see that these areas are not getting broken through. So Once you see that, you obviously don't want to look to take that trade just as of yet until you see like a full candle closure taking over it. So yeah, and then you go in your 5 minute time frame. Usually use the 5 minute time frame to look at like how to get into the trade, like retracements or breaker structure or order flow, or well, you really look for order flow within 1 minute. But basically, the reason why I keep getting into other things is because I'm trying to explain how to get into your buys for the day. This is not taking any trades. This is not actually explaining support and resistance. This is not explaining supply and demand. This is just finding out where the trend is going. As in, look, we're going to 4 hour time frame right here. We figure out where the trend has been going all night and before market open, so that way we can take a trade when market opens. We just want to find out what's going on, as in where's the direction, where are we going, who has more power, is it the buyers or the sellers? Once we find that out, then we go into 1 hour time frame and we look at our targets to hit. We got a target right here, we got a target right here. This is support and resistance as well. There are potential reversal areas, so we want to be careful for that, and we have to look out to see if they've been taken out or they've been respected or rejected. So we want to see that as well. And then once you find those, you want to go in your 15 minute to see if there's any setup, as in inverse fair value gaps, there's any supply zones, there's any demand zones, or anything. And then once you figure that out, then that's when we get into the next thing where we look to take our trade after we find our buys for the day. So what I would have done, this is what I would have done. Let me show you. Remove. This is what I would have done. So this is a part of my strategy as well. I'm not going to give the full thing in here because there's going to be another video where I'm going to break it down. But this is one of my videos. This is what I would do. We marked this is the 2 a.m. candle right here. The reason why I marked the 2 a.m. candle because that's London session. On the 4 hour time frame, that's London session. So this will be a little bit before market open. Market open is at 9:30, but then it also produces a new 4 hour candle at 10 a.m. So this is that new 4 hour candle at 10 a.m. Right? So this is around 6 a.m. when the new 4 hour candle started, going on to 10 a.m. So we marked the top of the 2 a.m. candle, the 4 hour 2 a.m. candle. I know I'm saying a lot of numbers, so try to keep up. But I'm marking the beginning, the top and the bottom of the 4 a.m. I'm sorry, marking the top and the bottom of the 2 a.m. candle on the 4 hour time frame. So you want to go on your 4 hour time frame, just mark the top and the bottom. So once you do that, you can see that we have the highest point and the lowest point as well. You can see where these wicks had came down. This is around 10 a.m. That 10 a.m. candle came and took out that low. These are potential reversal areas. This is why you want to find your highs and your lows. Because look at this on, let's go on a 5 minute time frame. You can see these same two blue lines that are marked out in the higher time frames. You can see your highest point, you can see your lowest point. So these are potential reversal areas. You can see once it came back to this highest point, we reverse down. Once it came to this lowest point, we reverse up. So this is why it's important to find your bias for the day. We go in the 1 hour time frame to see what trend we're on, so we don't get fooled by manipulation like this. Reversal points. You want to find the higher time frame, 4 hour or the 1 hour, and find the trend that we're going on. So you see we're obviously going bullish, right? So once you do that, you go into smaller time frames. Let's go on the 1 hour. I'm sorry. You can still see no liquidity sweep, no low taken out. This low wasn't taken out yet. It almost got taken out right here, the 9 a.m. candle, but it didn't. So we waited, and that 10 a.m. candle came and took it out. And then you can obviously see huge rejections off of this support, off of this low as well. We got 1, 2, 3 rejections. So yeah, we have all of these things in order. That's really it for it. Just finding your bias for the days. This is just one of the videos, so don't be discouraged in your trading journey, because all it really takes is just looking in the higher time frames. And what I mean by don't be discouraged in your trading journey is because you can be completely right for your bias, but you don't look on the higher time frames first to find out what your trade actually is going to be like. You know, so that's what this video is about. This video is just about learning the direction of where the trend is going. Like, this video is just about finding your bias for the day, because once you find your bias for the day, you most likely going to be right. So yeah.